Price anchoring. We all fall into this trap. Kind of think about it like the opposite of FOMOing into a position. This anchoring bias is where we as consumers or investors refuse to buy something because we just saw it cheaper last week. Why are we going to overpay for it now, when in reality, it's selling for today is the actual price for today? Think about real estate in the last few years. How many people have waited to buy because they keep waiting for prices to pull back? Or Apple stock, I'm sure it looked expensive at 20 bucks, 50 bucks, or even 100. I'm Skylar James. Welcome back to the channel. Let's get into this aspect of behavioral finance to understand what you need to know about it. It's very common, and it happens when we as investors or consumers see a price and assign that price a normal label in our minds. This could be the cost of a new TV, a new car, or a share of stock. Any future prices we see of that same item get compared in our minds to the first price we saw, and we make a judgment. So if a stock was $100 a share last year and today it is $200 a share, we might find ourselves thinking this stock is too expensive, that we get less for our money today than we did a year ago. Look at Nvidia's share price. You'd have missed out on a 100% return if you didn't buy a year ago after it had risen too fast just the months prior. Anchoring bias would have cost you money. How about this? Do you remember when widescreen TVs first hit the market? They were thousands of dollars. They weren't even 1080p, let alone 4K. Now you can get a 4K widescreen for a few $100. Anchoring bias tells our minds that TVs are cheap now. It's only because our reference price is 20 years old. The underlying truth is that the price alone doesn't tell us anything about the fundamentals of why the share price has changed, why the share price has risen. Warren Buffett famously told us that the price is what you pay and the value is what you get. We buy stocks for value, not the price they sit at today. But the mind is a powerful thing. Our minds tell us not to buy at elevated prices and to wait instead for the price to retreat to those previous levels. Price anchoring, in short, can ruin a portfolio. It can ruin a person's goal of being the most successful investor possible, because price anchoring stops us from purchasing an asset. Assets, of course, generally increase in value, so not purchasing an asset is a missed chance at growing our net worth. So how can we avoid this? Well, for me, sometimes it's as simple as shutting my eyes and pressing that buy button. Because if I've made it that far in my research, in my due diligence, far enough that I'm on the brink of pressing buy, I shouldn't let the price anchoring or anchoring bias stop me. What's 5 or 10% in a share price if I'm projecting the stock to rise 100% from here? Another tactic is to look at the price chart of your stock or security. Compare the 1 year or 5 year of that stock or security to your due diligence and ask yourself, will this go up from here? Price isn't as important as whether or not an asset is set to increase in value. This same thinking could be true for consumer goods like that TV, or how about cars? I've covered the rise in automobile prices as part of various shortages and supply chain hiccups. Should that stop you from buying a car? Well, it depends. If you have anchored your bias toward what cars used to be priced at, can you confidently tell yourself that the price will fall back to 2019 levels? Guess what? I don't think it's going to happen. I even put out a video on why new car prices are going to stay elevated. Because what's your alternative? You going to ride the bus every day until car prices drop to 2010 levels? You're going to be that person on the bus preaching about how back in your day, car prices used to be half what they are now? The reality is numbers on price tags go up all the time. Let's not let a number stop us from buying value. Nvidia is still a great buy. Ethereum has a solid blueprint. QQQ, KRBN, or whatever you've been waiting for, perform your due diligence and then just do it. Thanks for watching, and I'll see you on the next one.